We are going to go through first the three financial statements on how to read them and how to understand them. So you don't have to be an accountant to read through the financial statements. It's quite straightforward to pick up some key points, and let's spend a few minutes on how to do that. Firstly, think about a fruit stall owner in this example. So if you are a fruit stall owner, you want to record how much money is made on a daily basis, on a monthly or yearly basis. You want to record where did your money go to, say the cash that you receive from your customers. Do you use it to buy more fruits? Do you use it to pay rent? And lastly, you want to record how much your store is worth. So for instance, if you own that store itself, what is the value of the property? Yep, so there are three things we want to know from the financial statements. How much money is made, where did the money go, and how much is the store worth today? The three financial statements that we are talking about includes income statement, the cash flow statement, and the balance sheet. So for any public listed company in the stock market, you would be able to find these three financial statements in their quarterly or annual report. Starting with the income statement, it records how much money you make or lose. So you can see this on a quarterly or annually basis. In the income statement, you would see the top line, which is the revenue or sales, all the way down to the net income or net profit. Here is an example of an income statement. So you start with revenue. For this example, you're talking about 1 billion sales or income generated from the business. You move on to cost of goods sold. So very simply, this is the cost to produce or the direct cost to produce the goods that you sell. So for instance, if you are making an iPhone, it's the cost of the iPhone parts as well as the direct labor that is used to manufacture the iPhone. So taking off 500 million from the cost of goods sold, you will come to the gross profit of 500 million. So this is the profit after deducting costs with making or selling the goods. And then you have operating expenses. So here you can see that it is the cost of day-to-day activities, or sometimes we call it overheads. So here you can see we have the selling, general, and administrative expenses. So these are like, your standard wages for your office, admin staff, for instance, or rental. And once you deduct the operating expenses, you will get the operating income of 440 million. So this is the profit from business operations. In some cases, you will have loans or debts that you take on, and you have to pay off the interest. So you take off 30 million here for interest expense to pay back the loan or the debt that you have. You will have a pre-tax income of 410 million, and this is the profit after all expenses are deducted. And the last portion that you need to deduct is the taxes. So a company income tax of say 30 million for this example, you will reach a net profit of 380 million. So this is the net profit after taxes. It's clean and final for the year. So you sell 1 billion worth of goods, and the net income that you have is 380 million. If we go back to the example of the fruit stall, revenue is the money that you make from selling fruits. The cost of goods sold is the direct cost that you use to purchase the fruits. Then you come to the gross profit, and the operating expenses for the fruit stall could be the rent. And then you come to the operating income, assuming that you take a loan to buy fruits or to expand. Then you have to pay the interest. And then at the end of the day, you would need to pay some income taxes on the revenue that you earn from selling fruits. And then you come to the net income, which is clean and final to the owner of the fruit stall. To summarize, the income statement is to see how much money you make or lose in the business with a clear clarity of what are your cost factors. So we have covered the first of the three, and we'll move on to the next one.